Ned, I want to start with your notion that you use Google mobility and home-based data to try to find the exact inflection point when things turned, and it was April 10th for you, which is earlier than we would have thought, but it helps explain the risk-on trade pretty well, does it not?
I think it does. And, it wasn't just about the Fed. We've had a clear inflection point in economic activity that actually began just days before that April employment survey week. And then we saw subsequently a pretty significant improvement between mid-April and mid-May. And I think that explains actually the solid employment numbers. So in hindsight, we should have probably paid maybe a little less attention to jobless claims and more attention to some of these alternative data sources. What's nice is that they continue to show positive momentum even since the May survey week. So far the data bode pretty well for June employment and for retail activity as well, both in May and June.
So don't look at claims, but look at these alternative sources. And you're talking about things like Google mobility and home-based data. And that's where you might find more relevant info?
Those have been, I think they've been very relevant, and they, in retrospect, told us a much cleaner story and much more consistent story with what we saw in May employment numbers. Claims, for some reason, gave a very misleading signal. If you asked me a week ago, what's my favorite economic indicator and what to watch right now, I would have said jobless claims, but they clearly failed us last week. They're painting a much weaker picture of the labor market than what we saw, both from the ADP as well as the household and the payroll survey. So still pay attention to claims, but it seems like they're still running weeks behind. Perhaps we're still trying to work through the bottlenecks. I definitely will be paying a lot more attention to some of these alternative data sources.
Aneta, if people had done that, the disconnect that was so widely publicized between the underlying economy and the stock market would have been easier to understand. You don't think it was just the Fed. You say, well, there's the Fed, plus there was all that fiscal stimulus as well, but that's not everything. There were things happening to explain it that were real and not just sort of ephemeral, like stimulus or Fed.
So you've had a clear turn in the momentum, right? There is a difference between kind of the rate of change, which clearly turned positive around mid-April, and the actual level of economic activity. There, I think we still see quite a bit of a disconnect between the markets and the economy. We've had one great employment report, but that's one data point,
yep.
And we're still short, quite a bit of jobs. We still are looking at double-digit unemployment, 16.5% if you adjust for that classification error. And we've still got inflation that's moving in the wrong direction. So there is still a gap between the market and the economy. And I think, as we move through the summer months, there's still a question whether we can sustain that positive momentum that we've seen over the past 2 months, in particular as fiscal stimulus starts to fade very quickly and actually go into reverse. So there's still a gap, and I think still